So a lot of times I have clients that will come to me and they're nervous about credit because maybe some, life happened. A big event happened. Sometimes you just can't avoid, and it is what it is. Great thing about credit is you can always rebuild. So what advice would you give to somebody that maybe had a huge hit to their credit because of a loss of a job or a divorce or bankruptcy or even a foreclosure? How can they start rebuilding some of their credit?
So my recommendation for these is going to be to talk to a credit professional, right? And I know that that sounds cheesy, but it's hard because everybody's situation is different, right? Are we talking about a medical life event? There's going to be different ways to recover from each of those. However, main key is going to be to make sure that you're trying to keep as many of those payments paid on time as possible, but just having somebody help you figure out what's the most important, what's the order to do these things in. And when we're looking at rebuilding credit, that one answer is always going to be to have a credit card that is paid on time, so that you have at least a trade line that is current, that's helping you build, that's helping you recover. And then it's going to be kind of navigating what to do about the rest of it, right? What, depending on what happened. And somebody talking to you, talking to somebody like me to help them navigate where to start with that recovery process is important, because a lot of people spend a lot of money paying things that don't always make it better. And that's the worst, right? When people have forked out thousands of dollars trying to fix something and
Yes.
it didn't actually get better. So having a current trade line, but also having somebody help you navigate what to do and where to start with those other accounts that you were struggling with.
Yes, because even for us on the lending side, it could be a totally different situation for one person versus the next, even if it's
Yeah,
something like a bankruptcy or a foreclosure. It really depends on what program you're looking at, where your scores or your credit is currently, and then what you're looking at, what is on your credit, maybe collections that we have to add to your debt to income ratios, different things like that. There might be one that's better or worth paying off versus another one that you were about to pay down. I have a client that, excuse me, she wanted to pay off some of her old medical to build up credit or to get it better. And, it really didn't change anything for her because it does sound like, oh, well, I'm going to pay this off or get it off my credit. That's going to be better. But it doesn't always necessarily mean it's going to help build up your credit. So for
right.
her, it was better to have the medical just stay where it was on her credit and have the funds in her checking account. And then, of course, long term, we'll talk about it, get with you, talk about, is this good to pay off, or let's see if we can dispute it or, get it taken off, removed, because medicals are different. But yes, I would just always recommend having the conversation with the lender and credit repair and make sure that what you're doing is actually a benefit to you.
Yeah, and oh, are you are you stopping?
Go, go.
Um, I was gonna say with a divorce too, those can be tricky because the the court and the attorney will say, they'll divvy up the debts. They'll say, this person's responsible for this and this person is responsible for this. Well, the bank that lent the money never agreed to that.
Yes, that's a good point.
So just because the court is saying this person's paying this and this person is paying this, the bank doesn't actually care what the court says. So it will still affect your credit the same. So a lot of times there's things that need to be refinanced out of that person's name. And the attorneys don't do the credit end of it. So with a divorce, that one, definitely talk to a credit professional, because again, that the what the court says doesn't change the credit piece of it. It's hard. There can be new late payments and things like that, and the court is saying that person is legally responsible for that account, but all that that means is that company couldn't come after you for the money. It doesn't mean those late payments or repossessions or whatever it is can't report to your credit report. And it makes it really hard. So
Yes. And where
that's
you,
something to always look into.
right, or even stop you from being able to purchase.
Oh,
You're
100%.
living at home. Hmm.
All the time. I see it all the time, and it's really hard because, the client will say, oh, that person, I'm not responsible for that. That person was. And it's like, well, it never got refinanced out of your name, and the bank doesn't see it that way. The bank lent both of you the money, and they don't care how they get it back. That's the way that it's reporting. So there's certain ways we have to go about those ones when we're kind of in that divorce process, and just making sure that the actual credit end of it is taken care of and not just on that court level.
Yes. Great point. Love that.